YouTube family, thank you so much for visiting my channel. And on this channel we talk about personal finance and investing, and today I'm going to share with you how I pick my stocks that I invest in. Just as a way of background, I'm an economist and I mostly invest in the Canadian and US stock exchanges, but a lot of my friends have been reaching out to me early this year asking me how do we pick stocks, because there are thousands and thousands of them. An easy answer is that there are stock screeners that one can just use. For example, these are softwares that you can put parameters and then select. For example, if I want to invest in business that has a market capitalization of 5 billion and then which has had a return of 10% or 15% over the past 5 years, and then it pulls out those numbers from the stock exchanges that you'll be looking at, and then it gives you a selected numbers if there are any. And then that's how some people do that. For me, I look at 5 key things, so please hang on so that I will explain all this. The first one is I look at the meaning, and then I look at the product or service that the business is manufacturing or producing. I look at the competitive advantage, also better known as the moat, and management and margin of safety. So I'm going to explain all those metrics that I choose. The first one is very simple. I am someone who is value driven. So if the business that I want to invest in has been involved in scandals such as child labor or things that I don't align with in terms of my values, I just don't invest on those. So it's as simple as that. Because when you invest your money, basically you are funding that business. So that's one thing that I easily look at. So I just look up online. Number 2, I look at the product. I'm currently recording this video actually on an iPhone. And iPhones, they are manufactured by a company called Apple that is based in the United States. And they have actually quite a number of other things that they design and manufacture, such as personal computers, tablets, wearables, and accessories. And they sell a variety of other related services, such as Apple Care, advertising services, digital content. And if you go on what is called the Security Exchange Commission in the United States, where Apple is listed, you will find out that there are lots of information on the forms that they file, such as the 10K form. So that's another source, and also even on their website. I like to go on the Apple store and also even online, and the service that they provide, at least from my experience, has been fantastic. So I look at those things as simple as that. Now I like to look at the competitive advantage as my third point. The competitive advantage, I look at is this business a market leader in their specific sector? For example, in the tech sector, Apple globally, they produced about 30% of the smartphones. So what that means, even though Samsung and other competitors, they are actually up there as well, but they are still not to the size of Apple in terms of the market share. So I like to invest in businesses that are market leaders, because then they can change their prices or alter their prices without necessarily losing their market share. So that can be a potential to increase their margins in terms of the profit without necessarily losing their market share. So I like to look at those. It's very easy to just look at that. Or even on the 10K form, if you go on Apple, you can search competition. You can see that they list that other companies that compete, or even other competitors, and how they plan as a business to ward off that competition. Number 4, I look at the management. Apple is managed by a team of experts and people who have a good track record. So for example, Tim Cook, using my example, he is invested in Apple. He is the second largest holder in terms of the shareholding after the founder. So what it means, he has a skin in the game. So I like to invest in businesses that have founders or CEOs or the top leadership who own some shares, who are invested in the business, such that if the business fails, they also fail financially. And if the team is also more experienced and have stayed in that company for a long time, it's good because now they know that landscape quite well, and that could be a very good indicator. And in addition to that, I look at other things. For example, the financial analysis. I do a deep dive on the balance sheet. Specifically, I like to look at the balance, the long-term debt in the balance sheet. Has it been increasing? And this information is publicly available because by law they are supposed to file this information so that investors will have the information that they need. Now, I also like to look correspondingly on the cash flow statement. And on the cash flow statement, I will be specifically looking at the free cash flows. And this number is usually at the bottom, right at the bottom. So I like to look at the trend. And what I do is I look at the cash flows as a ratio of the long-term debt. So if that number is greater than 3, in other words, if the long-term debt can be paid off in 3 years or so, I'm comfortable, depending of course on the industry. But I don't like to invest in businesses that have a lot of debt generally. So because if the interest rates or other macroeconomic environment or factors like a recession happens, then most businesses might have challenges in terms of the market might decline, potentially also interest rates might be increased, leading to the increase in the cost of borrowing. So as long as they can contain the variables that they can contain, such as managing their debt, long-term debt, I'm happy with that because I don't want to lose my money. Then in the net profit, in the income statement, I look at the net profit, like, has it been increasing, the revenue, the sales, and I analyze it and I take my time. Usually when I'm analyzing a business, I take maybe 3 weeks and I'm just doing this after my day job. I just, spend 1 hour analyzing the financial statements, and it's publicly available. So that's what I do. I don't like to just invest in businesses that I don't understand. I like to invest and then be at peace after putting my money to work. Now, the fifth thing that I look at is the margin of safety. Essentially, I like to know the intrinsic valuation. That is the objective assessment of the business fundamentals. And there are basically various models like the discounted cash flows, which is essentially the summation of the future cash flows divided by the interest rates over the time period that you look at it. And I will put the formula here so that at least you have an idea. But these formulas are, the information is publicly available. So if you go on the Excel spreadsheet and you just, put the information over the couple of years, you can have an idea of the range of valuation. So that is important because now, once I have a range of valuation, I know like, okay, currently this stock is overvalued or undervalued, because a lot of people, they lose money because they buy when the stock is overvalued, right? And other people like to look at the earnings per share. Basically, when investors invest their money, they will be projecting that the earnings for that company are projected to grow based on other fundamentals like their growth, the business growth, and even the cash flows, future cash flows. So there are quite a number of those other metrics, like even the current asset ratio, looking at the current assets over current liabilities and looking to see, are they in a healthy financial position? Essentially, that is very important. And equally importantly, I like to look at the return on equity, ROE. For me, it has to be at least 15%, because for every dollar that I want to invest, I want an individual company to retain at least 15%. And lastly now, before I then invest, I like to invest when it is discounted. In other words, once I know that value, and let's say it drops by 20% below the intrinsic value, I start to add shares. So what I do is, there are usually things like catalysts, like if they fail to meet their earnings expectations, or maybe there's an external situation like the recession, like I said, then they might actually, the stock price might fluctuate because it goes up and down, but it goes below the intrinsic value, then I start to buy shares. And the good thing is that once I buy below the intrinsic value for a long-term perspective, I can then compound my money over time. So that is the key thing for me. And lastly, I just like to look at the general macroeconomic situation, and in that particular example that I used, I look at other people. How are other people investing in this business? And particularly using the example of Apple, people like Warren Buffett, Apple constitutes 50.04 as of the third quarter of 2023 of the Berkshire Hathaway portfolio. What that means is, using their experience and all the resources and the smart people around Warren Buffett, what it means is they believe in this business. But the key for me is I like to understand and do my own due diligence. And it's not as complicated as some people may make it seem like. So this is what I go through in terms of the checklist of things that I look at. And of course, it takes time and passion, and I do this part-time after my day job. So I just do this analysis way ahead of time, and then, have this analysis. And lastly, I then diversify my portfolio. I don't want to over concentrate. So for example, if you invest in Berkshire Hathaway, as an example, out of disclosure, I own Berkshire Hathaway shares. It means you have half of the share of the shares would have Apple. So it's an exposure to Apple. Investing in the S&P 500 also, Apple has about, I think, 7% as of 2020, end of 2023. So what it means is there are different ways of having exposure to Apple, and I like to diversify my portfolio, and I don't want to exceed 5% in one stock, no matter how confident I am, because I could be wrong. So I like to diversify by having index funds and different equities, and also to some extent some bonds and other fixed income securities such as treasury bills. So that's it for now. I'm going to do some more videos about this in future, where I will do deep dive into other companies in the future. But for now, I thought I would just share this out as to how I pick stocks. And have a fantastic year, and I wish you the best in 2024 and beyond. Thank you, and don't forget to subscribe again. Thank you. Bye for now.